Good afternoon, everyone. This is Matthew GS UK, coming straight live from the UK. We're currently 5th of October 2024. It's 2:28 p.m. This is episode 12 of the 51362 EMA Strategy, and I'm going to dive straight into this. I've got a slight headache going on, so I don't want to keep this too long. So diving straight into gold on the Telegram Trade Masters, which is free to join. I posted on Monday that I took a sell position. The reason for this was because we had an opening where price was bearish from the week before. We filled in this imbalance, which is here. Imbalance was filled there. So that was the week before's trade, which was great. Price has come up. It's hit the 13 EMA. So I've gone in for a sell. My target, which I believe I did call out as well. I don't really watch the videos beforehand, but I'm pretty sure that I did call out that gold was heading towards this area down here. So this is particularly a institutional candle. So it's this last down candle before this up move. So I think price, like a magnet, was heading towards that area, which it did beautifully. Caught a lot of pips on that trade. Beautiful trade, especially on the 4-hour time frame. Like absolute crazy returns on that. And then price decided to start reversing, which is all good. We had the whole flip, which is this green arrow here. And then you had the 5 and the 13 EMA crossover here. So you could have gone in for a buy there. I reckon have you take profit just above this high. TP would have been smashed. So that would have been a great trade to catch also on the buy side. And then it actually started consolidating throughout this week. I've actually stayed out of gold, if I'm being honest with you. I just haven't traded it at all this week except for the Monday. So now moving on to Bitcoin. Took a sell position on Bitcoin due to the 5 and the 13 EMA crossover. So let's just dive straight into Bitcoin. Okay, so let me just use the vertical line for Monday. Okay, so yep, straight away on a Monday, the 5 and the 13 EMA has crossed over, so I've got in for a sell. First target is this institutional candle down here. As you can see, this institutional candle actually captured liquidity before moving up. So therefore, I believe that they just wanted to mitigate out their positions. So that was my target. Price has slammed straight into that take profit area. So that was another great trade to catch on Bitcoin. As you can see, price, as I've posted this line here was where price currently was. So TP was smashed. And then I left the second position open. And then Bitcoin did rise up slightly. Unfortunately, we didn't quite get the 13 EMA crossover, so we would have not got an alert here. However, I was in a twin trade, so I did leave this second trade open and then managed to catch this move down here, which was a great trade. Second area of interest was this next institutional candle down here. As you can see, price has slammed down, and what happened was I always like to have the horizontal ray on the body rather than the wick, and I'll show you. This is a really good example actually. So if we put the horizontal ray on the wick, can you see how the price actually tapped the wick, but then price decided that it wasn't fully mitigated out of their positions? So if we put the horizontal ray on the body of the candle, can you see how now we have this wick and it's actually tapped the body? So because of that, price actually come up, and we did actually get the 13 EMA alert go off. Zoom right in. Can you see how this is actually wicked up? So the alert would have gone off, gone in for some sells there, and then I would have had the take profit at the body of this institutional candle, or this area of this institutional candle. So then sold there. Take profit was the body of this area, so the take profit would have got slammed, which is great. As we are looking only for sells, because the 5 and the 13 EMA has crossed over, and we have this color as yellow, looking only for sells, we wouldn't look for buys until the 5 and the 13 EMA has crossed back over again. And because we have reached this institutional candle, we are buying low now. We wait for the 5 and the 13 EMA to cross over, and then potentially what we want to really look for is a liquidity sweep or a pullback. And as you can see, this wick down was the pullback, and you've had the 5 and the 5 and the 13 EMA crossover went over first, then you get the pullback. So this would have been a brilliant buy to get in right here. And then now we're actually crossing over the 62 EMA. Crypto market is 24 hours a day, 7 days a week. However, my broker does not allow you to trade over the weekends. However, there is other brokers that you can do that, but as I mentioned, I'm not really a fan of it. I don't believe it moves too much, but it's up to you if you wanted to look at that. But I just wouldn't even bother, really. It's not going to be moving that much, if I'm being honest with you. So currently, Bitcoin is turned back to bullish. I would now say that, just make this a bit more cleaner, the next point of interest is imbalance. So imbalance is just an area where price has moved so fast that that area needs to be filled in again by price action. And the reason for this is there's just an imbalance in the market, and just like institutional candles, the market will reach back this area. So I have my target here. Again, I have done an imbalance video in detail, so please go and watch that video if you're still unsure of imbalance, and it's up to you if you want to go and find some more sources with regards to imbalance. But this is an imbalance area here, and then we have the institutional candle, which is the last up candle found before this down move here. So that would be my target now for Bitcoin to head to. If you miss this trade on the Monday when the market does open with our broker, I would say look for a pullback and then get in for some buys to catch this move up. One other thing as well, which I will be testing, is I have only got my alert set off for the 13 EMA to get in on the 13 EMA. However, it would be pretty cool to catch some 5 EMA trades, especially on the 4-hour time frame where we're waiting quite a long time for these trades. So as you can see, the 5 EMA would have gone off multiple times, so could have caught quite a few sells here rather than just taking this one. So I will be looking to test this out next week. I do have my alerts here, so just concentrating on Bitcoin next week. So as you can see here, I've got the Bitcoin 5 EMA crossover. So if price will come back down, tap the 5 EMA, then I will get in for some buys. So that'd be the nice pullback to get into, and then stop loss below the low, use proper risk management. And like I mentioned, the target is going to be up here. Okay, moving now on to something that I learned on my trading journey, and with regards to Forex, and you can use this in other markets as well if it's got the US dollar. There's something called the US dollar index, the Dixie for short, and this is just the strength of the dollar. If this is a strong indication that the dollar is strong, then the US dollar pairs should be strong as well, and the other pairs should be weaker. So for example, euro is weaker, so that's what you're seeing. This is being bearish because the dollar is strong. So it's kind of like the inversion here. Strong dollar means weaker euro against the dollar. GBP USD, the GBP is weaker because the dollar is stronger. So I don't know if you want to do some research on that and just some back testing if you want, if you're trading the Forex. I'm mainly concentrating on Bitcoin at the moment. I just want to master Bitcoin and just master the strategy really with Bitcoin, and now adding something else into the mix, which is the 5 EMA going off. And on the subject of the 5 EMA going off, this might be a good example. So can you see here, there was no wick that come up and tapped the 13 EMA to get in sells. Yes, you could have got in up here with the 5 and the 13 EMA crossover, but there was no real wick that's actually come up and hit the 13 EMA. However, the 5 EMA would have kept on going off as price is moving down here. So could have got into some sell positions on the way down and catching this move basically in the entirety on its way down and scalping multiple positions if that's what you want to do. So I would say that the 5 EMA might be a good thing. I'm going to test it moving forward next week. I'm actually going to pause the video because I didn't have something ready, and I will be back in a second. Okay, and I'm back. I can't remember the last time I've actually done that, where I've actually paused the video and had to go and do something else for that video. I've just all my videos, I've just freestyled it and just done it from start to finish. A lot of YouTubers, I say a lot of YouTubers, I know there's quite a lot of YouTubers and TikTokers and all that kind of stuff. Like if you see the videos, they'll do a minute or 5 minutes or 10 minutes and then the video stops and then they go again. Like I just do it from start to finish. I just like to save time really. Anyways, I'm back and I just want to show you the trade checklist. So I don't know if you want to make notes of this, but this is currently where I'm at with it. And with trading, it's always evolving. With this strategy, I'm always looking to improve it. So for the entry, I wait for the whole flip close. Then actually, let me just tell you what that is. Whole flip close is when the actual candle has closed, then you get the solid red or solid green or whatever it is symbol to get in on that trade. So for example, the whole has flipped here, so it's telling you the market is potentially going to reverse. You can set this to, I'll just quickly show you. So you can set this per bar close or per bar open, or you can do it only once and once per minute. But per bar close is actually when the whole candle has closed and then it moves on to the next candle. So then you get that solid sign to get in for the buy or the sell. If you do it, for example, once per bar, the alert could go off, but the candle is still active. So I like to just have it on bar close. So wait for the bar close. That's the first part of the checklist. Wait for the bar close. Then you wait for the 5 and the 13 EMA to cross over. So then you get the 5 and the 13 EMA to cross over. You could go in for a sell then, and then you can have the stop loss below, above the high. Or you can get in on the 5 EMA, or you can wait for the 13 EMA crossover. So you get in on the 13 EMA crossover or the 5 EMA crossover, waiting for like pretty much a pullback or liquidity sweep, and then you get in. Exit the trade is again on a whole flip close. Let's just put close there. Whole flip close, an institutional candle or a high Kanashi candle color change. So for example, if you got in a sell here, when the holes flips there, you could have closed your positions. This is actually another good way to get out, actually, is on the 62 EMA. So let me just add that in. Or 62, can't spell. Or 62 EMA. Institutional candle. So this institutional candle, if you're selling up here, you could have take profit there. Or when the high Kanashi color changes, so this has gone from white to blue, so you could get out there. So that's your exits. Buy low and sell high. So from here we're actually selling high, and then obviously from down here we are buying low because we just had a massive sell-off, so we're now buying low. So buy low, sell high. Sit on your hands and do not trade lower time frames. Only trade the 4-hour time frame. Different time frames carry different mindsets. What time frame you enter on, you should exit on. Okay, this is very important, and this is something that I used to struggle with at the start. And I'm not going to lie, sometimes I do it and I'm trying my absolute best to not do it. But if you're looking on the 4-hour time frame, you shouldn't really then be dropping down to the 1-hour time frame and then looking at the 15-minute time frame, and then you go, no, okay, like let me just look at the 1-minute time frame now. Like they all carry different mindsets, and although it is the same strategy, and I will cover lower time frames in very future videos in soon to come, they all carry different mindsets because the market is constantly obviously moving up and down. But if your stop loss is here, for example, and you take profit is there, you are getting in the market in and out very, very fast because you're on the 1-minute time frame. So as a general rule of thumb, if you enter on a 4-hour time frame, you should be exiting on a 4-hour time frame. I would not look at any other time frames except for the 4-hour time frame. Obviously, if you're trading the 1-hour time frame, only look at the 1-hour time frame. Okay, hope that's clear. Next up is if you miss the start of the trade, don't get in. You are late to the train. Wait for the next train, which is the trade, or get in on a pullback or a 5 EMA crossover. So what do I mean by that? If you were out for the day and your alerts went off, say 2 hours before, and then you just look at the market and the market is right here, but you got notified down here to get in, it's a common thing for traders to just buy straight away here. But then what happens is the market can pull back, pull back, pull back, pull back. You're in drawdown, probably going to hit your stop loss. You got a massive stop loss because your stop loss is supposed to be down here, but you've entered up here. So what you need to do is, again, you have to be very, very patient, and you have to wait for the pullback and another opportunity to get in. If this just carries on going up, yes, if you did buy there and the market carries on going up, happy days, but it's kind of gambling in a way because you don't actually know that's definitely going to happen. And it's all about getting those sniper entries and buying low and selling high. So up here, you're not buying low, you're actually buying high. So you need to really wait for the pullback, and most times it does happen. hopefully now testing out this 5 EMA crossover, price could actually come back down, and it will be in the same candle. Well, you will see that on the 4-hour time frame. Price can be moving up and down like this in the same candle, because on the lower time frames, that's obviously what it's doing. It's going down like this, and then it's going up and it's going down. So you'll see it like doing this in the within that 4 hours on this one candle. So price could come down, it will hit the 5 EMA, you get the alert, so then you buy there. This is what I'm hoping for anyways next week. We buy on the 5 EMA, and then price carries on coming up like this. So that's what I'm going to be testing next week to see how I get on with that. Never done it before, but hey, I'm always up for improving this strategy. Next up, back test and forward test. So over the weekends, if you're bored, you've got nothing to do, back test this strategy, see where you'd get in, see where you'd get out. Forward test, you can only do this when the market is actually open. So that's just obviously buying and selling in live environments. And then I would say use the risk to reward tool and try and stick with it. So for example, say we got in this trade down here. If you add the long position to your favorites and the short position, if we bought right here, stop loss could be below this low there or below there, whatever one you want to do. We'll just do this one for now. And then, like I mentioned, we have this nice bit of imbalance here that needs to be filled. And then we've got this institutional candle. I do believe this is an institutional candle because it looks like it actually has captured liquidity before it's carried on down. So just set the horizontal raise on the body and the wick. Can you see how this wicked up above this candle here? So I think this actually captured liquidity before moving back down. So I would have this as the target area, and that's going to be a 1 to 6 over a 1 to 6 trade. So risking 1% to make 6.5%. It's not a bad trade to catch. So that's the risk to reward tool. I would say start using this when you back test. Use your risk to reward tools of where you would have got in, where you would have got out if the trade played out, if it didn't. But yeah, use the risk to reward tool. And then do not get distracted by other things. What do I mean by that? Well, I mean like lower time frames, looking at multiple other pairs, like jumping between gold, looking at Forex, looking at this, looking at that. But then you've really took your eyes off Bitcoin, for example, which is the trade you was in or the pair you was looking at, and you've just got distracted by all these other things, and before you know it, you've just messed up your trade or missed opportunities. So I would say just stick with one trade for the next few weeks. So yeah, task for yourselves, little task for everyone. If you want to do this, it's up to you. I would say journal all of your trades. You should especially do this as a beginner. I do have a video on journaling, which is in the trading playlist on my YouTube channel. Stick with one pair. I would say stick with Bitcoin. Bitcoin looks like it's always got nice big swings, and it's always moving these nice big moves, like always throughout the week, and it doesn't really consolidate that much. Like, okay, yeah, it did consolidate here a little bit, but there was still opportunities to buy here and then get out there, and it's come back down, and you buy here and you could get out there and could have bought down here. And so although it's consolidating, it's still got opportunities to get in. Like it, if you just quickly look off the bat, like this is just beautiful. Like it's always moving perfectly for this strategy and just exactly what we want. And it's just, yeah, nice. Like all these big, nice swings, exactly what we want to see. Like with gold this week, It just like Monday was great, don't get me wrong, but looking at this, like it just looks beautiful. Like just this appreciation of this art with Bitcoin, like just so good. So I would stick with Bitcoin and stick with it for the next few weeks or a month. I'm just going to be sticking with this for a little while just to master the 5 EMA and this strategy as a whole, and just yeah, see how I really get on with it. What else have we got here? Stick one pair for a few weeks. Back test and forward test. Use proper risk management. So again, use the proper risk management for the size of your account and stick with it. Don't be going using a 0.5 lot size and then the next week using 0.05, you know, and then see how you get on. See how you get on for a few weeks. Carry on watching these videos, and yeah, look forward to hearing how you get on. I'm excited for next week. It's gonna be good. Should be catching some more trades, I believe, now because of this 5 EMA. So yeah, we'll see how we get on. Finishing up now. Let's have a quick look at the calendar for next week. So Monday will be the 7th of October. Just mainly looking for that red folder news and US, really. Not really interested in anything else. I did notice actually on one of these sites there was crypto news. So as I'm more invested in this Bitcoin, I think I'm going to be looking more at Bitcoin news or cryptocurrency news rather than just Forex news, or looking at both. Anyways, let's have a little look. Nothing on Tuesday, nothing on Monday, Wednesday, nothing. Thursday, okay, Thursday. There's some US news here. A lot of red folder news for US on Thursday, so be keeping my eye on that. Friday, there's a red folder news at 1:30 p.m. UK time, and 3 p.m. as well. So Friday you can see a bit of movement. So yeah, just looks like Thursday and Friday next week. Just be keeping your eyes on that. Trademasters is still free, will always be free in Telegram. Link in the bio to join that. I was a bit quiet this week. Nevertheless, I did post a couple of trades for gold and Bitcoin. My broker is FP Markets. We get to use good lot size, good risk management on any market, which is great. TradingView, I am a partner with them. So to get those 20 alerts for the 5 and the 13, the 62 and the whole flip, you do need all those alerts really for this strategy. So if you're interested in signing up with TradingView, I've got my link in the bio. Appreciate it if you did click that affiliate link and join through that. If you just want to stick on the free plan and you only get the one alert, I would probably say with just Bitcoin, I would say maybe set that to the 13 EMA, see how you get on with that. If not, stick it to the 5 EMA and see how you get on with just that one alert. It is possible, but you do really want to see that whole flip as well. And we have looked at the market news for the following week, but I will be posting to the job description, the YouTube description, the market outlook for the following week, which should be posted on the Monday or the Tuesday. Appreciate you taking time to watch this video. Please subscribe to the channel if you got any value from it and you want to carry on seeing the strategy. And I look forward to next week and seeing you in the next one. Take care. In a bit.